All right, everybody. We are excited to be here with you today. I'm going to move this camera over just a smidge. We're rubbing shoulders. This is one of those where you realize how close people are on camera,
Yeah.
when they're right next to each other. But we're excited to be here. Me and Rich, I'm excited to have Rich here with me. He's an incredible accountant, CPA, tax advisor. He's going to give us 5 tips. And I was just talking to Rich about some things that he's going to share today. And as I told him, the thing that I really appreciate is he not only gives you the tips, but he tells you, hey, this is what you need to do to make them effective. There's no magical box you can check that's going to wipe away your tax liability, but there are things you can proactively do. And a lot of us just don't know what to do. And that's why, again, I appreciate Rich. He walks you through the process. We'll go through some of those today. You may not be able to get everything that you need out of it as far as the time that we have, but if you need to reach out to Rich, he's going to be available after. He's also got his contact information here on this front page. You see info@krtaxes.com and then his phone number there. So if you need to reach out, feel free.
Thank you.
It is the end of the year, so this is actually very timely as well. There's some things that you can still do now, and that's why we wanted to do this webinar before the year ended, because there are things that you can do into next year, but there's some things that you'd prefer to get done before the end of the year, and it's a great time to do it. Without too much further, Rich has a great long history of doing this. He's been at it on his own from since 2009, and had a lot more experience previous to that. Rich will probably tell you a little bit about some of his experience exists because of the loss of his first spouse and some things that he learned through that process, sadly through that process. But there's some things that you can really learn as you are a small to mid-sized business. A lot of small businesses are owned by husband wife or husband or wife, and there's some things that you can do from the tax perspective to benefit both in those situations. So we're going to jump right into it. I've got the legal disclaimer as always next, if I can get to it here. There we go. This is just to say, hey, we are providing advice today. If there's specific situations or information that you need, please reach out to us. We're here to help. As I like to do, I like to give you a quick legal update as well. The Department of Labor is the entity with the federal government that regulates overtime pay and minimum wage from a federal level. So Arizona has its own minimum wage laws. It does not have any overtime laws. The federal government, though, every private employer is subject to the federal overtime rules, and that's where the Department of Labor is the one that governs that. So if anybody's ever been audited by the Department of Labor, you know how that feels. We've helped companies through that. Now, currently, the Department of Labor has the current rules say that anybody that works over 40 hours a week, unless they're exempt from overtime, are owed overtime. The Department of Labor is coming out with 2 new rules to change the threshold hour and also potentially the amount that is going to be owed. And so that's something to keep track of, and we'll keep you up to date on as you move forward. The other interesting thing, we've been dealing with this quite a bit lately. NFTs, this year, non-fungible tokens, are hot. They're a big item to be discussed, and not a lot of people understand what they actually are. There was a recent lawsuit. Quentin Tarantino was providing or creating NFTs for Pulp Fiction. And so it's an interesting lawsuit. It'll actually be fun to see how it plays out. But Miramax said, hey, that's our movie. We have all the rights to it. And we've got this non-fungible token side that we're going to see how it relates to the trademark copyright rules.
Wow.
So that'll be fun. Yeah, that'll be a fun side. We provide information and advice on NFTs. There's a lot of things that come from that on the legal side that you can set up. So if you have questions on NFT related items, let us know.
That's a great thing. I was going to tell you, in our community, we have this big a sale going on right before Thanksgiving, and all the community puts their everything out there. And I'm driving through with my electric bike, and I see this guy, and he's older, and I'm like, hey, what are you selling? He's like, oh, I'm selling all these baseball cards and football cards, like 60s and 70s. Picked them up. I thought NFTs. That's the first thing. Yeah. So
look through those, look for the good one.
Yeah, I bought the whole thing.
Yeah.
$300. I have a gal coming into my home. She's coding them all, and I'm getting ready to make some NFTs.
Way to go. That's cool.
So it's exciting.
Hands-on experience. I love that.
For sure.
Well, very cool. So there you go. Another advice, another tip.
Yeah.
Some of it's you just have to know It's a process to get set up doing them. I mean, I've looked at a lot of different things and I've walked through it with people. And so it's a time intensive endeavor. That's one thing that Rich and I talked about before we started is Rich likes to do what he preaches. And so that's something that I appreciate as well. He's not going to preach to you about certain things and then not do them himself. So he's got firsthand experience in the items that he does. So I love that though. NFTs, very cool. All right, so let's jump into it. We're excited to talk about 5 tax tips. This is an overview. What we are going to do today is go over scenarios and then specific pieces of information relating to those scenarios. So the 5 tax tips that we're going to go through are LLC S corporation taxation, family management plan, 401k safe harbor with defined contribution, health reimbursement arrangements, and the Augusta Rule. So I would love, Rich could talk to you about these for literally hours because he has that much passion and knowledge on them. So I'm going to just jump into the scenarios and then I'm going to let Rich tell us all the smart things that he knows. So, all right, scenario 1, Andre and Brittany, husband and wife, want to start a business with John where they lease long haul trucks to truck drivers. They have set up an LLC, but they're not sure what they need to do to file taxes the right way. What should they do? That's a loaded question, but maybe just step back and kind of walk through what you're thinking on when you see these types of situations.
Lots of times we see people that they set up their own LLC and they don't understand really the tax code. An LLC really doesn't save you money. It's really a state entity. But what happens is the IRS, they'll default you into a taxation if you don't know or do anything. And so 2 people that start an LLC, the IRS defaults them to a partnership. If it's a single member and you create your own LLC, and sometimes every state has different rules, but you'll create one and the IRS will default you to a disregarded entity. And so that's really a Schedule C inside your personal return, a partnership, but both of those have the most taxation and the least amount of loopholes. And lots of times that disregarded entity, a lot of people do their own taxes and they mess them up. 44% of the population that do their own taxes get audited. So they just don't know. But the best way to be taxed is an S corporation. You have a C corp, like a Southwest Airlines. So if you have stock or you're paying big wages.
Think of big companies typically.
Yeah, definitely. But an LLC S corp, I have a couple of them. You'll pay the least amount of tax. Why? Congressmen and senators have them. They were created to protect the business owners and congressmen and senators. And I love history when I look back. And so I can go in to a company that's been set up as a Schedule C LLC, and I can save them 22%, 25%.
Dang.
I'll go to a farmer's and I'll save them 60, 70,000 just by changing their identity.
Wow.
But there's rules to it. So you have to ask the IRS to be taxed like an S corp within 75 days of every year. So when you create that LLC, and you can see that the best ways they're in order. So sole proprietor, that's a defaulter, partnership, corporation, and an S corp. So why not go for the gusto? I'm from Idaho and I use analogies. So if I'm playing football, I want to play football with a nice padding, but some people play football in a loincloth. And that's a Schedule C. Why would you do that? You're going to get hurt. You're going to pay more taxes. You might get audited more. Let's move yourself away. I'll tell you a quick story. We had these rodeo guys. They came to us. This guy, a couple of years ago, made $95,000.
Dang.
And he's like, hey, what should I set up? All my friends are setting up as a sole proprietor. And I'm like, I'm going to set you as an LLC S corp. Got him in there. Saved $45,000 in taxes.
Dang. Wow.
His buddies that did it on their own, after 3 years, they all got audited by the IRS for being a hobby. So there's these hobby rules. Well, when you're an S corp, you're thousands of miles away from being audited.
Interesting.
So any rodeo guys, anybody in horses, anything that looks like a hobby, we put you in an LLC S corp. IRS will never touch you.
Wow.
Yeah, it's amazing.
Well, so let's take that one step back. So when somebody files or creates an LLC, and I know both you and I do that, they create an LLC. It is a legal entity. It's called a limited liability company.
Yes.
Those are really cool on their own. They have a lot of benefits, but that does not designate a tax status. That is simply something that's set up with a state, not the federal government, just the state.
Exactly.
So when you're looking at how am I taxed, an LLC doesn't tell you anything about how you're taxed. There's a default rule with the IRS that you talked about, sole proprietor or partnership, But as you talked about, when you actually get ready to file for something, you have to file the right form to be taxed as an S corporation.
Exactly.
Cool.
And a lot of people, when they do it, here's the worst thing we see. They'll do everything on their own and they'll get the EIN and they'll go through the online version and they'll say, how do you want to be taxed? And they mark the box LLC S Corp, but it says if you want to be an S Corp, you have to jump through another hoop.
Yeah.
They don't read that. And then they'll come to us and they're like, I'm supposed to be taxed, but I'm getting all these IRS letters. Well, you weren't really approved to be an S Corp. So our region in Ogden sends you a letter and says, you're approved to be an S Corp. If you don't get that letter, a CP 251, you are not an S Corp.
Wow.
So just by checking that box, it kind of throws you off.
Yeah.
So try to do it yourself. You can get yourself into trouble.
Yeah, I agree.
So
that's awesome. Well, let's jump to this because that S Corp is going to be kind of the foundation for the next tips that we talk about.
exactly.
I think. So
definitely.
let's jump into it. So let's thinking about it from the LLC setup to being an S Corp taxed, and that's the foundation. Let's jump into scenario 2. Marco and Esther run their own Instagram shop selling kids clothing. They have 3 kids under 10 years old that they want to get involved in the business. How can they do it in the most tax efficient way? So we want to talk about some of those tips that you've talked, we've talked about. So what is the way that they can get their kids involved and also get a benefit on the tax side?
Yeah, there's an excellent way to do that. And this law has been around for years. So if you're an S Corp, the IRS has a rule that if I pay my kids directly, I have to give them a W-2. So there's a middle company we create called the Family Management Plan. And we create that for multiple reasons. But the IRS says the standard deduction of kids today in 2021 is $12,550.
Okay.
So you can pay all your kids for helping out in the business and being on the website, and you transfer money from your S Corp and you get a deduction and you transfer it to this family management plan, which it is an LLC disregarded entity. We usually put it under the wife. Sometimes the husband, but we only put it under one. So you transfer that money there, get an expense, and then you open up bank accounts for your kids, your co-signers, and then you transfer the money to them. Now, they can put money into a Roth, or they can gift the money back to your company, and it's not income. It's a magical way. $12,550.
When you say that, that's not taxed as a W-2.
No,
that is just simply, it's almost like a gift. If you think about it the way taxation, it's
exactly
not taxed. And so now family management plan, is that a term that's used by the IRS, or is that something that is created, how do we get to that
Yeah,
place,
it's kind of an industry.
Okay.
So some of the experts that we follow, they all kind of use the same terminology.
Gotcha.
So under your case, we would call it the Coons Family Management Plan. We'd make sure nobody's using that name. And then we put it underneath your wife, and then you transfer it to there, and then we give her a 1099.
Yeah.
Okay. But the kids, when we transfer it to their respective accounts, they don't get anything because it'll ruin it.
Yeah.
You don't give them a W-2 or a 1099, but that's the standard deduction. In the 80s, when I was doing this when my kids were little, we had no internet, we had nothing. And the standard deduction was $3,750. So what did I do? My wife and I got together, and the top 10 clients, we knew their birthdays. My little daughter's saying, my wife would take them to Tim's house.
Yeah.
They would sing happy birthday to him.
Yeah.
I'll pay him $3,750.
Yeah.
To do that.
That's awesome.
Yeah. So you can do a lot of things as long as they're helping you in the business.
And the ability to demonstrate that is going to be something that you need to do, right? I mean, so for instance, nowadays you're saying with internet, you have your kids, your pictures, whatever. Like you say, your kids are writing even happy birthday cards, stuff like that to clients. That's a way that they can demonstrate they're involved.
Exactly. They can sweep, they can shred, they can do lots of things, but the sky's the limit now. And we probably have 200 clients to do this. So think about it. Stop giving your kids money and not taking a deduction. What are you doing? Yeah, right? Take that deduction, have them do a little bit, and keep that money. $12,550 in your own pocket. You're gonna save about $3,000 to $4,000 a kid, and then they can put money in their Roth. When they become 15 or 16 years old, it's gonna be like, my dad, Tim, he's amazing.
Oh, I wouldn't tell him about it.
No, you won't tell him. Okay. But yeah, if your kids are 14, 15, they can pay for their own soccer.
Yeah.
They can pay for their own things. And you teach them financial principles by moving that money in. Let them pay for it themselves.
Yeah.
You're going to pay for it anyway. might as well give them the money, take a deduction. Pretty
Yeah.
awesome.
That is cool. I love that. Okay. So let's jump over to scenarios. So this is the family management plan. I should have probably jumped here first, but this kind of walks through that deduction. You'll see on there the 12,550. You do have to have your entity set up. So that's where we go back to an LLC.
Yep.
And in this event, you're not taxed as an S corp. So when you're walking through these scenarios, you can see why it's important. I will tell you, it is not overly complicated, but the missteps are ripe for happening. And so the issue is, if you don't know how to do it and you don't do it right, then you're subject to getting audited, which is not where you want to be. So again, that's where Rich comes in and can really help with that process. Tax savings, 3 kids, you kind of run through the math there on what that looks like. And then the same thing you just talked about, why keep giving your kids money without taking a deduction for it?
Exactly.
That's great.
Yeah, and you have your own business, you can have them do a lot of things. Realtors help them put up signs, help them on the website, help them send cards out. There's so many things you can have them do. We have a list of 37 things. So email me, I'll give you the list.
Cool.
That a bunch of us CPAs put together.
That's awesome. Okay, I love it. I love it. So that's number one. We talked about a family management plan. There will be some byproducts of that in the next couple scenarios, but that's a big one. That's one of your, that's a big one for you.
That is.
Okay. Scenario 3, Lisa has been running a successful consulting business and is looking at steep taxes in the coming year. She has not yet set up a retirement fund, is not sure if she can even set up a 401k as a solo owner and employee of a business. Can she? And then secondarily, what if she has 3 employees? How should she do something?
Yeah, that's a great question. So the retirement plan, there's really like tiers of dominoes with the IRS, and like she could put money in herself and her husband, and you could put $6,000 in if you're under 50 into an IRA, traditional IRA. But there's income limits. If you make over that limit, you can't put that money in. So then you could go to a Roth. A Roth is not deductible, but for a married couple, 198,000 together, you can put money into a Roth, but you can't take a deduction. The next tier is like a simple IRA, and they're pretty good. You can put in 13,500, and then you can go to a SEP. If you have no employees, you could put money into a SEP. You could put 25% of that net profit if you're a Schedule C. But if you're an S corp requires you to pay. The IRS wants a slice of the pizza. The reason you can save so much money on an S corp is because the IRS says, give us a slice in a W-2. Let's say I make 100,000. The slice of the pizza is about 25%. So I have to pay myself $25,000
in wages. And you have to take out wages, tax, W-2 taxes from that.
Social Security, Medicare. Take that out, but the remainder 75% is only taxed federal and state. That's what makes it magical. But when you're in an S corp, if you're just a single member or husband and wife, you can do what's called an owner K. The IRS calls it a one participant solo K. So if you go to IRS solo K, you'll see it, and it tells you the rules. Well, a one participant 401k, the 401k is like the magical one. The reason it's so magical is because you can borrow from it. You can create hardship. Let's say there's a hardship in my family. I can take money out without any penalty.
So let's back up one step. So the floor, you talked about the dollar amounts for the SEP, for some of the other things. Why is this beneficial? Why would you even go through the hassle of setting up a solo or 401? 401.
Because you can put the maximum amount in.
Okay, there you go.
So the IRS sets it and says, Tim's under 50. I already know that. So he can put 19.5 for him, 19.5 for his wife, and tax defer it. So it lowers his tax.
That's $38,000. Almost $39,000. Okay.
But your gross, he gets it deducted on an S corp. Then let's say Tim paid himself 100,000. Okay. Then he can match for himself 25% of that as the employer. So he's the employee of his own company. He can put another 25,000 in there.
Wow.
So the magic number is 154,000.
Wow.
W-2.
Wow.
I have to pay myself 154 to put in 58,000.
Wow.
So the heads of the coin is the 401k, and the tails of the coin is the pension. Same coin, but tax deferred. But the cool thing about an S corp is you get it deducted
from your income or from your gross.
From your business.
So it reduces your net liability to the IRS. Essentially.
Exactly.
Cool.
So the 401k is the greatest one of all. Now there's one called a defined benefit. If you're making a lot of money, you have to pay yourself $230,000. you can put in $201,000.
Holy smokes.
Give it to yourself, and you'll save 70% of your taxes.
Yeah.
If you have that money. So there's all these different tiers, but I always go for the best one, the 401k, because I can put the most amount in. If I do a SEP's kind of like, oh crap, I forgot to do a
What's
401k.
a SEP? We use the term SEP.
It's a simplified employer pension.
There you go. Okay.
So if you have employees, you have to share. So under a SEP, I can put in, if I started my business and I hired some employees, I can put it in for myself, but not put in a SEP for 3 years.
Okay.
But employee, if I do a 401k, they can put in 19.5. I create what's called the safe harbor. And the safe harbor says, if they put at least 5% into a 401k,
yeah,
I'll match 5%.
Yeah.
It's a drop in the bucket. I get a deduction.
Yeah.
So you can do a 401k safe harbor with employees, and you can be more greedy if you want and put less in. So that's kind of the best one if you have employees. But if they haven't worked for you for more than 3 years, you can do a SEP. I put in 25%, but your income has to be much higher.
Yeah.
So the best bang for your buck is a 401k, husband and wife, solo K. It's the same 401k.
Well, it sounds like a lot of work is what most people tell me.
It is a little bit of work.
Is it? Okay. Tell us about that.
It's a little bit of work. So when you're in the 401k realm, you're in the Department of Labor, and there's rules called the ERISA. So their own kind of 10 commandments, if you will.
Yeah.
And so when you do that, there's a plan document you have to set up. So we have someone that we hire, and I call him the police force, a TPA, and he creates all the documents.
The plan administrator.
Plan administrator.
Yep.
And then, and I don't become that, I hire someone else to do that.
Yeah.
And then my investments, they're two separate things. Where I put my money, now I self-direct mine. My staff put it in the stock market.
Yeah.
I put mine self-directed, and I can buy rental properties. I put some in cryptocurrency.
Yeah.
I can buy cows with it.
Yeah.
All kinds of cool stuff. And it's exciting. But you can self-direct it if you'd like to do that.
That's fun.
So it costs a little bit more. It costs about $1,200 to set up. And then you have the investment fees if you put it in the stock market.
And that's where I think a lot of people get caught in the complexity. And really, when we're talking, it sounds a lot more difficult because we're using a lot of terms that some people will understand and some people don't, right? We talked about the word even 401k. I think everybody's heard it, but it doesn't always make sense from a basic level what that looks like or what it is, especially if you're a small to mid-sized business. You may have heard it from an employer side, but you never offered one, right? Or a SEP or anything else. So that's where, again, I just want to remind everybody this webinar is just a brief touch on some of these concepts. Really what the focus is here is there's an introduction on some really cool opportunities. I'm not a tax advisor, so I'm not going to say, hey, I know for sure these are what they are, but that's why I brought in Rich. He can walk you through the details of how those work and what that looks like, because these are ways that you can show, again, family management plan, get some money to the kids without just giving them money. Also reduce your income or your gross income on that side so that you're not paying as much in taxes. 401k, how do I shift money over into a retirement account? That's either self-directed, which means I take my own funds in that account and invest it, or it can be directed by somebody else, like any other mutual fund or anything like that. And the end benefit of the 401k, the SEP IRA, and anything else is reducing the gross so that you don't pay as much in taxes. That's the point of everything that we've talked about so far.
Exactly. And his last piece, he says, discuss with a financial planner.
Yeah.
We have our own financial planner inside of our firm that understands tax, Rick Montgomery. So you can email us and we can help you with any one of those. Sometimes it might not be beneficial to set up that 401k. You don't have as much money. It's really a cash flow issue. It'll give you a nice deduction, but how much is that deduction? So I want to say this on any concept with tax. So most people, if I put in $1 to my 401k or to a traditional IRA, I'm going to save about 40 cents, depending on your tax bracket. So just use that theory. $1, if I spend $1 in rent, I'm going to save 40 cents. If I put $1 into my retirement, I'm going to save 40 cents. That's kind of the average. That's called the marginal tax rate. And if you can get that in your mind, that's where you're going to save. Sometimes people say, oh, I'm going to save 100%. Nobody saves 100%. He doesn't save 100%.
Nobody. And honestly, if you do, you're going to run risks on that.
True.
Here's the other thing that I know. People say, well, if why have I never heard of this, right? That's the common thing that I hear even in my legal side. When we approach things from a very
Right.
strategic standpoint, people get concerned because it's not a concept that you hear every day. I like to liken it to, we're huge Suns fans in my family, right? The Phoenix Suns played the San Antonio Spurs from 2004 to 9, and we lost every time, right? Every time in the postseason. One of the concepts, if you look at the coach of the Spurs at the time, he didn't do this with the Suns, but with the Lakers, anytime Shaq was playing, they did what's called hack-a-Shaq, right? That's one of the rules that he saw. It wasn't a rule that you said, it didn't exist. Nobody did that before. But when you saw a bad free throw shooter on the floor and he was dominant every way else on the floor, if you just let him do what he does. But if you fouled him every time and he only made 1 out of every 3 free throws, that was a win. Even if you put him on the line every time down the court, free throw line. So that was one of those where the rules are set up in a certain way. And if you can find the ways to use them to a proper advantage, this is nothing that we're talking about today is Cayman Island type of stuff. We joked about that. This is all very much within the rules and regulations of what's provided. It's just looking at the rules and finding where those opportunities are. That's really what we're talking about. So,
exactly. And one of the things, my dad was a CPA, but he was a Marine. And we talked about the concept, Dad,
oh, interesting.
Do I take that deduction? And my dad always had a rule, and I follow that rule. I take the bird in the hand because I can fix the future. So I take those deductions. Yeah, do I have Ross? Yes. There's a thing called a non-deductible Roth. So if I make too much money, I can put 7,000 in for me because I'm over 50 and 7,000 for my wife.
Yeah.
We do it every year. And I invest that in crypto. And I convert it right to a Roth the next day. There's so many cool things you can do. But I take the bird in the hand. I take as many tax deductions as legal. And we don't want to get anybody audited, but we try to always take that. And I get that big question, should I take that or should I do something else? Now, Roths are good for your kids because you can pull it out when they go to college.
Yeah.
And now the laws have changed. You can pull it out for high school.
Oh, really?
For grade school.
Dang.
Yeah. For special schools. The rules are cool. So you might as well take some of that, pay your kids, put it into a Roth. Yeah. It'll help pay for their school.
Cool. Yeah. That's awesome. Okay, let's jump to the next scenario here. Let me see. And I did see a comment. We'll share the list. I saw a comment that somebody requested that we share the list of those activities the kids can do.
Perfect.
That you can do for the family management plan. So we'll make sure to do that.
Okay.
Josh and Michaela have 2 kids and are constantly spending money on prescriptions and health-related items for their kids. They struggle to find ways to best capture that on their taxes. What should they do?
Yeah. That is huge, you guys, because the standard deduction increased. In 2017, standard deduction was about $12,000 and they moved it to $24,000. So when you itemize, difficult, but when you have kids, you have some high medical, if you have a mortgage, property taxes, and you do charitable deductions, you could go over that. But what happens is there's a line called the adjusted gross income. And so in the tax code, they made it permanent, but you take 7.5% of your AGI.
No.
So let's say my AGI is 100,000.
Yeah.
7.5 is $7,500, right? So I have to spend $7,501 to get it on my taxes.
To even get a deduction.
To even get a deduction.
So your floor is 7,500 to get anything, even to start.
Yes, on medical. Yeah. Now some CPAs don't even ask the question. That's not right, because we live in a beautiful state of Arizona. So let's say you get $100. Anything you don't get goes to Arizona. The whole thing, that 7,500 rolls to Arizona. So we want to take it. But the problem is it's so high. But if you have a business, you can create what's called a health reimbursement arrangement. So I'll kind of tell you what it's not. So you have an FSA, that's kind of the use it or lose it rule. HSA, you can put $7,200 in on an HSA, but you have to have a high deductible.
You have to have a high deductible plan that qualifies.
Yeah, that's right. Yeah. And the IRS sets that, which is $2,800 for a married couple deductible. So they move it up every year, but you don't even have to have a high deductible. And the rules have changed. If you have like a share, a Christian share ministry, they allow that to be deducted now.
Oh, cool.
So you can create an HRA, husband and wife, and you have that family management plan that we created for paying the kids. Now you put that HRA inside there and you link your card to that business So everything you swipe
Cool. Becomes a deductible expense.
on the business.
Yeah.
And our government, guess what they did? They opened the floodgate.
Let's hear it.
Tampons are deductible. Feminine hygiene products.
Tylenol.
Over-the-counter drugs.
Yep.
Adult diapers.
Yeah.
Now, Tim and I, no adult diapers, but I'm telling you, the list is off the chart.
Yeah.
So if you go to like Cigna and you type in FSA, HSA, they'll go over everything. You're like, so I got my card. I looked at mine because you guys, I would lose on everything.
When you say linked it to yours, you're saying you linked it to your family management plan?
Yes.
And how do you link your card to your family management plan? What do you mean by that?
Okay. So we have to have a third party set it up.
Gotcha.
And it's called a Section 105 plan. So
Okay.
we use a gentleman named Todd Kuhn from Task.
Cool.
And we can get you set up, connected with him, but he monitors it. So he's kind of the auditor and he gets you this card. But what the government allows you to do is I could set it up today. Today's the 17th.
Yeah. I
can go back to January.
Yep.
And you and your wife can sit down and go over everything. Okay. We spent on contact lens solutions.
Yeah.
This and Icy Hot.
Yep.
And feminine products. I wish I would have had this when I had my 3 daughters.
Yeah, for
my
sure.
wife.
You would have saved a lot of money.
Like $6,000.
Yeah, yeah.
I kept track of it too.
Yeah. Well, that's good.
So every little thing. Now, if you have staff, you have to share with staff. So if you connect with your business, that's why we've had that family management plan, because it's
Separates it
just
out.
you and your wife.
Gotcha.
Yeah.
So the dual benefit of the family management plan at that point, even if you run your own business that has employees, you can attach it to your family management plan, and then you can just run it under that.
Yes.
Gotcha.
And be kind of more selfish. And it's just the Coons family or the Lowry's family.
Gotcha.
And I get to take that 25,000. And if you're a doctor, I have a
So
chiropractor.
Maybe talk with this through me though.
Yeah.
So that family management plan doesn't have it doesn't have a lot of income, right? So is your
Just have some
threshold-
money.
Yeah.
Just have for the
So your
kids.
threshold's lower for
Yes.
that to reach where you can actually start deducting. Is that fair to say, or am I missing?
Oh, the
that?
thresholds.
Yeah.
Nothing.
Nothing. Yeah.
Yeah. So you get every single dollar
Yeah.
linked to my card. I'll just quickly show you. I have my card right on me. I love this thing. So when we first got it, I was so excited. And Kelly's like, go get the prescriptions at CVS. I go to CVS, swipe. I got those. I threw in some Band-Aids.
Yeah.
I wanted to check it out. I bought one of those soft pillows.
Yeah.
Makes me feel well. And I love gummy vitamins because I'm still a kid. So I have my gummy D's and my gummy everything. Take it in, take my task card. It's linked to my business now.
Gotcha.
Swipe it. I did something. I put a candy bar and a
Yeah.
Coke in there and it beeped. Says not
Can't
allowable.
do it.
No.
Oh, it tracks it for you.
Yes.
Oh, that's nice.
It's so nice.
That is nice.
So January till now,
Wow.
we can send you an Excel spreadsheet
Yeah.
and you put it together. But my chiropractor, if I need something,
Yeah.
like sometimes chiropractors give you
Wellness
massages,
products, sure. Yeah.
yeah,
Yeah.
I can run it through
Interesting.
if I'm at a chiropractor's office.
That's nice.
Yeah. So there's a lot of things. And the tax code, if you get a doctor's note,
Yeah.
and you get it, you can run it through.
Dang.
It is amazing.
That's awesome.
It's manna from heaven.
Yeah.
On tax side. So you'll love it.
So you see a few of the things here, and again, this is just a snippet of what's available. So if you have more questions on this, which I'm sure you will, because this sounds really cool.
Yeah. So
Reach out.
the 20,000 that we've spent, we just saved 8,000 on taxes
Dang.
that we never saved before. I lost it all the time on the Fed. Now it rolled over to the state of Arizona.
Yeah.
I love this state. We're one of the only states that does that.
Yeah.
All the stuff you lose on the Fed goes to
Go
the
state.
state.
Yeah. Dang,
But
that is awesome.
massive.
Yeah. All right. So let's go scenario 5. During the pandemic, Jana frequently used her home for team meetings and or gatherings. While it's not the first thing on her mind, she's wondering if there's a way to get a tax deduction for this type of use of her home.
Yes, there is.
Let's talk about it.
Okay. So IRS has a couple rules and there's a couple conditions. So let's say this room in here was an extra bedroom. I can't have anybody sleep in it. It has to be exclusive, but anything inside here, my desk, my chair, everything we can deduct in it. If you come to my office at home, I have a big screen TV.
Yeah.
Because when I'm working, I need that 85 incher in there. So
Makes sense.
you can deduct it. But the IRS years ago in the 70s and 80s in Augusta, Georgia, they would have people rent out their house in Augusta, Georgia for $4,000 a week. I lived in South Dakota. They had the Sturgis Rally.
Yeah.
These bikers would come, hey, rent your house out for $4,000 a day.
Holy smokes.
So the IRS had all these court cases. So they created a rule called the Augusta Rule. And they said, you can rent out your house for 14 days. You look at what it would cost for a conference room and a hotel room and to rent that out. And the average in Arizona is about $750. I just have to document the date, who came to it, and what I talked about.
So an Excel spreadsheet would be fine.
Yeah, Excel spreadsheet. You can send it to us. We have the document. And you don't even have to report the income because there are so many court cases. So you just go and put the date and who you talked about, legal services.
Yeah.
It can be your family.
Yeah.
It can be your friends.
14 days in a year.
In a year.
A total year. Wow.
Yeah.
That's a lot though.
Yeah.
That's
so for
cool.
750
on
the average, 10,500.
Wow.
Now we did it with a guy in Alaska. The average up there is about $1,000 a day.
Oh, cool.
So we sat down, we went over the dates, him and his wife, put who they talked to. We talked to the Smiths, we talked to Montgomery's, and what did we talk to them about? And you could talk to them about maybe a stock purchase agreement or the type of law that you do. I talked to them about tax deductions, and I get 14 days of deductions right off my business. Awesome. So once again, 40 cents on every dollar. I just saved $4,000.
That's incredible. So with that, there's two kind of scenarios I think you talked about. One is if you're just conducting business from your home, like all of us have for the last 2 years from the pandemic, or two, in the scenario, if you're hosting, let's say you do have a company party at your house, or you're having your team come over and do a team building event or anything like that. That's also one of these that could fall into this Augusta Rule, right?
Exactly.
Okay, cool.
Yeah, I had nieces and nephews come and visit me.
Yeah.
Now it's easy for me for a wedding gift or whatever, I give them a free tax return.
Yeah.
But I always talk to them about it, and I could put that on that I spoke to them about tax deductions.
Gotcha.
So they have to come to your home. So you're renting at your home, you have to have a business. As long as those two common denominators, sometimes clients will be like, I really don't have an office in my home.
Sure.
So they can't really take anything. They can't take.
Now, do the people have to pay you the rental fee? Or is this just a deduction that you have to? Okay. That's what I'm sure a lot of people are like, is that something that I'm going to have to charge my niece to come in? As many people would want to do that.
Right. Exactly. Yeah, you just get a straight deduction just by itemizing that event under the tax.
So you don't need a receipt even from the person to say, hey, they paid me X. Okay, that's cool then.
Yeah.
Wow.
I've had some clients do that.
Sure.
They'll have one of those receipt books. They buy at Office Max.
Sure.
And they'll say, hey, we talked about this.
Yeah.
And they have them sign it. It's always nice.
Having receipts is nice.
Or have them sign.
Yep.
It's kind of like American Family. We have a lot of clients that we do that. They take their staff golfing and everything.
Yep.
When they do that, they have them sign. They agreed to it.
Yeah. Almost like when you drop something off at one of the charitable donations places. So they give you that signed document just to show that you've been there.
Exactly. Now, what you're doing, sometimes you're recreating this backwards. You can do that. It's okay. But futuristic, I love that.
Yeah, very cool.
Have the documentation, talk to them about that event, and have that person sign it.
Yeah, love that.
I have a form that I do that. If I travel and I try to pick up business, and the people reject me, like on a cruise.
Yeah.
And I'm that talkative guy, right? And I'm talking to people on my cruise. Hey, can I do your taxes? No. Yeah. No. Hey, will you sign off that I spoke to you about this?
Yep.
Yeah. Awesome.
So we have another person reaching out. We'll have Rich reach out. It's somebody looking to talk through a financial planner.
Perfect.
Yep. Love to do that. Love to connect you to. That's a big reason why I do these anyways, is just because I know within my own sphere, we help. I'm a big believer that we help people with a small fraction of what they truly can need to be successful. In legal, we help them set up in a way that's going to protect them from liability, be futuristic in their growth, and be all the things that they need to be from the legal side. But I'm not an accountant, a tax advisor, and that's why we associate with so many different people. Financial planning, IT, marketing, all those things are parts of running a successful business. So I love that comment, because that is exactly why I run these, is because I want to connect people in my network with other people that are looking for similar things. So
yeah, that's one thing I love about Tim. He's an employment attorney, and as our firm started to grow, I knew we had to do something. We reached out to him. Magical, gave us the best contracts to protect us, protect the employee.
Thanks, Rich.
Yeah, and we're just empowered. And so what Tim loves to do, and I like to do, is we're a holistic company.
Yep.
we want to solve issues that you have. If we can't solve them, we know someone that can.
Yeah. And really what you just talked about today is solve issues you didn't know you didn't have. That's
True.
what I think makes you good.
Yeah.
Is on my side too. It takes somebody who's really involved and invested in thinking about what's best for the client. And that oftentimes makes you have to step out a little bit further than where most people are at, because everything you talked about today takes a lot of work on your side.
Yeah.
It takes a lot of work to dot the I's and cross the T's in the right way, because Rich isn't going to tell you something that he's going to say, hey, go do this, and not have you tightened up on the back end, because that wouldn't benefit him or you.
Exactly.
So I'm going to jump to the next slide. I just want to catch this comment. Yep, 100% agree. Thank you. As for the materials that we've gone over today, if you have any requests, this is my email. If you have, Rich actually sent to me a full 2-page or 3-page document with some of the breakdown of the 5 tips that we went over for today. He'd be happy to share that with you. It also has his bio, which is really impressive. So you can either reach out to me or Rich for that. Be happy to make that connection there. We talked about some other things today, even the additional expenses or the ways to utilize the kids and other stuff like that, that I'm sure you'll have questions for Rich on. So the referral partnership program, we have a great program with CPAs, accountants, financial planners that we've seen be very successful. People are excited to have somebody they can reach out to, they can trust, and somebody that can take care of their clients in the right way. So if you have any questions on that, let me know. Otherwise, Rich, it's been a pleasure.
Thanks,
What a
man.
great day, huh?
Appreciate it.
I really enjoyed it. So
I did
thank
too.
you, everybody. If there's